Details revealed about Uber's upcoming IPO. The ride-sharing app is aiming to raise some $10 billion, which would make it the biggest IPO of the year. This is according to documents first reported by Reuters. It could value Uber at as much as $100 billion. CMN's Samuel Burt joins us now. Samuel, great to have you with us. I think the obvious comparison to make here would be Lyft and the IPO and the reaction that we've seen subsequently. The comparables there, I think, very favourable to Uber. But if you look at their core businesses with ride-sharing, the numbers are slowing. They're showing slowing. Talk us through this.
Exactly. And the other part that you have to think about is, yes, there's the ride-hailing part. So we're going to have to figure out just how much of a part of the company that is. But think of all the other parts of Uber. We're talking about e-bikes, e-scooters, which you've seen me on so many times right here on the show. You've got driverless cars, and then you've even got flying cars that they're investing in. So it makes it very difficult to try and price a company like that. And of course, the market doesn't have a good history of pricing companies very well in the IPO. Just look at Twitter or Snap, for example. But we have to get to the points that we're getting out of these documents now, and we're expecting to get even more tomorrow. Yes, we have some context for Lyft, but let me just put up on the screen my 3 takeaways, because you alluded there to the slowing growth. The growth that they have is incredible. I mean, we're talking about growth rates of 25%, but that's much lower than what analysts had expected of 38%. Number 2, we're about to discover where the deep losses are. I just named you so many of the segments. Well, where are these huge losses coming from that we've seen for some time? Because Dara Khosrowshahi had this very strong idea of putting out the numbers before they even IPO'd. So we're getting a sense of how much money they lose each quarter. And number 3, and perhaps the most fascinating, we're going to find out more about their legal disclosures. Publicly, we already know that there are so many with that aggressive attitude that Uber had in its startup years. How many more will we be finding out about? That's the key to look for in the next few days, Julia.
Absolutely. And I guess for the point that I made there about the slowing growth in terms of their core business, I guess the obvious thing to say is to look at some of the other businesses like food delivery. And that's years behind in terms of potential with the core ride sharing. So I guess that would possibly make investors a little bit less concerned in terms of the numbers if you compare them, let's say, to Lyft here.
And over the years, they had so much of that core business, the ride-hailing, expanding and expanding to new countries. And in the past year, we've seen them retreating or selling their businesses or taking stakes in other companies. So that part of the growth, which had been their real driver for so long, just isn't going to be there. And in fact, when you look at countries where maybe they should have already been expanding, you're seeing incredible growth from local companies. You might argue that Lyft isn't their chief rival. That's maybe only in the United States. Around the world, it's really these other companies that have popped up that are really the local Ubers, but got to the local market before Uber could.